Good morning, students. Hope you all be fine. Now we are continuing towards our terminology. So much of you are sending your works very properly, so I need to appreciate everyone for that. And I hope that everyone is getting what I am trying to explain. Subjects are little bit new, but if we all will cooperate together, then it will be very good for each and everyone for getting good marks. Now coming to our topic, till yesterday we have seen so much words, and today we are left with some of the words. So today our terminology will get over, then a short introduction and a short conclusion about the chapter, and accounting system will be given. So today our chapter will be completed. Now tomorrow itself we will start new chapter in statistics. We will complete one chapter in account, one chapter in statistics, and slowly we will increase our time of the lecture. Just now in nowadays we are taking maximum 30 minutes lecture, because this is a theory part, and theory part does not need 1 hour. After completing this chapter, then we are going for statistics. First chapter also there is again an introduction, what is statistics, how is statistics. So 1 hour is not possible for that. But after completing that first chapter, now in both account and state, second chapter will have short sums. So at that time we are taking our lecture for minimum 1 hour, so that it will be very good and very easy for everyone to cope up with the subject. Okay, so going for our terminologies. Yesterday we have seen purchase, sales, stock, debtors, bills receivable, receivables, creditors, bills payables, then payables, then cost, then voucher, then discounts and its types. So in short, again we are trying to revising it. Purchase and sale means the businessman does the business, and if he is selling the goods, then it is purchase for him, and he purchase the goods, then purchases for him. Then stock means the goods which we are selling are left unsold at the end of the year, then that is our stock. Now debtors are the persons from to whom we have made the credit sales, and in future the amount is receivable from them. Bills receivables is also a type of debtors. It emerges from debtors. It is a written document between two parties. One is the writer, another is the acceptor. Here in bills receivable we will talk about the writer, the one who is writing the bill and giving to others for the amount written in future. Receivable simple means it is a type of bills receivable and debtors, and amount is receivable from the persons or anything in the future. In the same way, creditors are opposite to debtors. Creditors are the person from whom we have purchased the goods and we have to pay them in future. So creditors is current liability, where debtors are our current assets. In the same way, bills payable is also a written document. There are again two parties, writer and acceptor. And here we are talking about the acceptor, because in bills receivable we have talked about the bills writer, and in bills payable now we are talking about the bill acceptor. Okay, there also a specified amount must be paid in future, and it is again a type of creditor itself. It emerges from creditors. Payables means amount payable in future. It is just a type of bills payable and creditors. Now the next thing which we have seen is cost. Cost means the sum of all the expenses means cost. Then again voucher, we have seen voucher is a written document, and through voucher we can identify the business transaction, whether it is a cash transaction, whether it is a credit transaction, whether it is a purchase, sales or any other thing. Okay, and again we have seen types of discount. First of all, discount means the amount deducted from the amount of purchase and sales. The deducted amount is our discount. There are two main types of discount, which are the trade discount, cash discount. Trade discount is such a discount which is not recorded in the books, which is given to everyone, just to traders. That is about trade discount. Cash discount is to attract the customers to get the cash quickly from them. So the amount given as the cash discount is recorded in the books, whereas cash discount can only be deducted, can only be subtracted after subtracting the trade discount, and it is recorded in the books. Again, according to the income and expense, discount received and discount allowed. from discount received, we are getting it from the purchase. From where we are getting the discount? We are getting from the purchase. And discount allowed, we are allowing to the persons of sales. So this is about the discount allowed is an income, and discount allowed is an expense, and discount received is our income. Okay, so that things we have seen. Now friends, the next thing is word number 41, that is bad debts. Okay. Now 41 is depreciation for us. Now see friends, from word number 41 to word number 46 are such types of words which you have never heard before. Their words are totally new to you. Okay, so word number 41, that is depreciation. Depreciation is an expense of the business. Every year the value of asset is reduced by a certain value. Why the value of asset is reduced? We are using the asset, we are using the furniture, we are using our car, we are using our building. So its value is going on decreasing. So reduced at certain rate. Amount which is reduced is called depreciation. Suppose you are purchasing a mobile phone today. Now today its value is 10,000. If you are selling it in the market after 1 month or after 10 months or after 1 year, then you are not getting 10,000 friends. You are getting a lesser value. So the less value you have received is the depreciation on your asset. Mobile phone is also asset. We are not changing the mobile phone every time. Okay. And what else is written? Before making payment to government, depreciation is deducted. That is not for us. Last line is again important. Depreciation is a non-cash expense of the business. Now friends, what do you mean by a non-cash expense? Cash expense means the expense which is paid in cash, but non-cash expense means expense which are not paid in cash. It is retained in the business. Means you don't have to pay the cash actually, but you have to retain it in yourself itself. How? Suppose the value of your furniture today is 50,000. If you are selling it in the market, it becomes 35,000 because you have used the furniture, its value is reduced. Now the remaining a gap of 50,000 to 35,000, 15,000 is your depreciation. Now you have not paid 15,000 to anyone, but 15,000 you are getting less because due to its usage, its life decreases and its value also decreases. So you are not paying to anyone. These expenses are known as non-cash expense. The expense which is not required to pay anywhere, but they are again an expense of the business. Okay. So everyone now knows the value of depreciation. Depreciation means the amount which is reduced from the asset every year. That is our depreciation. Now word number 42 is bad debts. When goods sold on credit by the business person to whom goods sold is the debtor of the business. We know the persons to whom we are selling the goods are our debtors. From him the amount of sale is to be collected. That also everyone knows that if we are selling the goods on credit, means वो उधार रख रहा है, then he has to pay the money in future. Suppose he has to pay you 5,000 in the future. Now you have made so much efforts to collect 5,000 from him, but he pays only 4,500. The remaining 5,000 which is not recovered. Now what they are writing? Many a times, debtor of the business may not be in the position to pay the full amount due to his weak financial condition. Sometimes his financial condition also becomes weak so that he cannot pay. If the amount is not collected even after necessary efforts, the amount which is not received is known as bad debt. Bad debt is not an expense of the business, but it is a loss. Depreciation was the expense, but it is a non-cash expense. Now bad debt is not an expense, it is a type of loss. See, the difference between loss and expense is that expense is necessary and loss is not necessary. You can control your loss, you cannot control your expense. Depreciation is an expense, while loss can be controlled. सपोज हमें उन्हें गुड्स क्रेडिट पे देने ही नहीं थे, उसको जो माल बेचा है वो क्रेडिट पे मतलब कि वो उधार पे देना ही नहीं था, वो हमारी भूल है कि हमने उस पे ट्रस्ट करके उसको जो गुड्स दिए हैं वो क्रेडिट पे दी. Now he is not paying the money to us and we cannot collect the money from him. That is our fault, so it is a loss to the business. So two new words for today. Depreciation means decrease in value of asset, and bad debts means the amount which cannot be collected from our debtors. Okay. Now again two more words which are opposite to each other. Word number 43 and word number 44. Solvent and insolvent. Now solvent is scientific word, but here in accounting terms solvent means something different thing. Now what they are writing, we are reading. In accounting, a person who pays his financial obligations, he has to pay his expense or he has to pay his credit, such other things, financial obligations regularly and whose assets are more than its liability, the person is known as a solvent person. See, we have seen that yesterday itself I have written assets and liabilities. If there are assets, there are liabilities. Suppose person A and person B, we are having two persons. Now assets, liability. Asset means which are ours and liability which we want to pay. For person A, the assets are 100 rupees and his liability is 70 rupees. And for person B, his assets are 100 rupees but his liability is 120 rupees. Now friends, if we are taking the difference of asset minus liabilities, then this is the result. Person A has 100 rupees assets and he has to pay 70 rupees in future. So the net 30 rupees is a surplus to him. Surplus means profit. So if he has surplus, he is solvent. Now for person B, he has assets of 100 rupees whereas he has to pay the liability of 120 rupees, so he has minus 20 rupees, that is deficit. And this person is insolvent person. This person is insolvent person. So this is about the solvent and insolvent. It is very easy to understand that person who is left with the surplus is a solvent person. He can pay all the liabilities, and a person who has only 100 rupees and has the liability of 120 rupees, okay, he can take the loan and he take the loan and can pay, but suppose his limit of the loan is also finished, then what he will do? So that person is in deficit and he is insolvent. Now in accounting, a person who pays his financial obligations regularly and whose assets are more than its liabilities, the person is known as a solvent person. Whereas insolvent means in accounting, a person who doesn't pay his financial to pay these obligations and whose assets are less than its liabilities, that person is known as insolvent person. Unless the person is declared insolvent by the court, he cannot be treated as insolvent. Means who will decide this person is solvent or insolvent? Not me and you. Who will decide? Only court will decide. Why court will decide? Suppose we are receivable, we have an amount receivable of 50,000 from person A. Now he is paying 5,000 is our loss. We cannot bear that much loss. So we are making a case on him that this person is not paying the amount to us. Now what to do? Now the court will decide that actually he is in position to pay or actually he is not in position to pay. Now the court will decide that he is a solvent or insolvent person. Okay. Next is debit and credit. In accounting, there are always two sides because our name of our accounting system is dual system of accounting, and there are always two sides, and the two sides are known as debit and credit. What is this debit and credit? We will just see as an introduction, but in next chapter we will understand actually what this means. There are two important words of accounting. Every transaction has two effects in double entry system, debit and credit. True and fair understanding of debit and credit is true and fair understanding of accounting. If you understood true and fair accounting of debit and credit, then you cannot make mistake in any transactions. Okay. In accounting, two sides are used. The left hand side is called the debit side and the right hand side is called the credit side. If this is a board, then the left hand side will be debit side and the right hand side will be credit side. Okay. In the next chapter itself, and we don't have to read anything after that. Okay, so in simple terms, accounting has two effects, debit and credit. You have to remember just that thing. Now the last word, that is account. What do you mean by account? Now in our language, if we say account means khata. Khata rakhi aapne. We are keeping its accounts. Okay. So business transaction pertaining to certain items and persons would take place frequently. Suppose in a shop of ration shops, we are purchasing the goods regularly. Then we are not paying the account at every time. We are telling that you keep our account. हमारा खाता रख दीजिए हम. At the end of the month we will pay the amount. So the transactions are frequent with us. So we are maintaining the account for them. Business transaction pertaining to certain items and persons would take place frequently. This transaction may be of debit side having debit effect and credit side having credit effect. Transaction pertaining to respective item of person is recorded at one place where the summary of transaction that person can be obtained. It is known as an account. Now in simple sense, if I say that if the transaction with a specific persons are more and every time we need to write it separately, so instead of writing that thing separately, write it in a proper. Suppose in English subject you are having summary. A big paragraph is given and you have to make a short paragraph and to write the transaction in very short in summary, then that is known as account. So all the 46 words are over here. And all the 46 words are only required to write in the book. Other things which we are seeing are not required because it is just for an explanation. See, now after that what is given? Types of accounting systems or methods. In the next page you can see types and bases of accounting systems. And in that written on page number 20, Desi Nama system and double entry system. Desi Nama means what our parents used to do in previous days. Still they are following that method. Now they are having a red books, types of red books in the business. And when they are doing accounting in that red books, that is known as Desi Nama. In detail we have a separate chapter for it. And what we are using in our daily use is double entry system. Means one is debit, other is credit. How that is debit, how that is credit, that we will learn in next chapter. Only you need to remember their names. Now again they are basis, they are giving how to prepare the accounts, in which methods, and this is just for an explanation. I am not taking that thing. Then again in page number 21, they are writing one important thing: steps to prepare the accounts. How you will prepare the accounts of the business. A simple flow chart is given. If you read, you can also understand. I am just reading and doing it. First, you will take the base of a voucher. In 38th word itself, we have learned what is voucher. Voucher decides your business transaction. Whether you have done purchase, whether you have done sales, or whether you have a cash, or whether you have a credit transaction. So the first and foremost thing to write the accounts of a person is a voucher. Then identification of transaction. Through voucher you are identifying. Suppose in our business, a person gives a voucher. Voucher means a bill to us. Now from that bill you may understand, friend, that you have done purchase to him, or you have done sales to him, or you have done some. To prepare journal. Journal means a type of subsidiary book. For that separate chapter is given. After that you will post it into account, that is known as ledger account, which we have seen now. Then you will prepare trial balance and adjustment, and then final accounts. But what is this thing, you may not understand now, so I have just read the things, and this was a simple introduction. learn that thing, and tomorrow onwards we are going to start the statistics subject. So all be ready with your statistics notebooks and textbook. Okay, that's all. Thank you.